Boom, we are live, ladies and gentlemen. We have a fantastic guest for you, one of our good friends, Tyler Jenks from Hyperwave and Lucid Investments. Tyler, how are you doing this morning?
I'm doing great, Tiho. Looks like you're doing great too.
Yeah, it's a super exciting day in the jungle. I really enjoyed our conversations the last few times, and the last few days I've been kind of creating a bunch of conjecture in my mind about the situation of the current price projections and where we're headed. So if we can, just fill us in on your market sentiments. I know there's been a lot going on since the last time we spoke. So I guess let's start off with your general sentiments.
Terrific. In terms of Bitcoins and the crypto, I made my first purchase for myself and clients in 17 months. Haven't traded any crypto or any Bitcoin or any GBTC for 17 months. As you remember, I got a sell signal on a thing I call the Hyperwave all the way back in December of 2017. And when that happens, it basically means you're out of the market or short the market until it reaches a particular point, and that point's at 1,000 on Bitcoin. And you and I talked about that before. Along the way, on the way down, what was interesting for me is watching how sentiment changed from being 100% bullish as we were going up in terms of almost everyone. And most of that bullishness stayed in the market all the way down to 6,000. But some people got nervous at various points, starting with the first drop down to 11,000, and then got bullish again on the run up to 17,500. Then got bearish when it dropped all the way down to 6,000, obviously, but got bullish when it ran back to 10,000. Then got a little bit bearish, but not really, from 10,000 back down to 6,000, then again up to 8,500, a little less bullish because it didn't make the previous highs, back down to 6,000, right back up to 7,500, and then back down to 6,000. Now that 7,500 number is very important today. And the reason is because since 7,500, when we dropped down to 6,000 again and held it for 4 months, it capitulated and broke through 6,000, and in 2 weeks went down to 3,000. At that point, the big debate is, was that capitulation or was it not? And in my opinion, it was not, mainly because it hadn't hit my target down at 1,000. But it never got lower than that $3,180 low and ran up to 4,000. I didn't think it could break between 4,000 and 4,200, and it did not for 2 months. It kept running up to 4,000, 4,200, and then backing off, back and forth, back and forth. Finally, it did break out above 4,200, ran up to 5,000, got up to 5,300, 5,400, 5,500, and established a base. Now, all of that took so long in terms of time that it allowed another one of my systems that's called Consensio, which is basically moving averages, to flatten out. If you can just picture in your mind, we'll look at some charts later, but if you just picture in your mind something that goes down for 17 months, obviously all the moving averages are moving down. But then when you get down to 3,000 and then mess around between 4,000 and 5,000 for weeks and weeks and weeks and weeks, all of those moving averages begin to turn around. So when we then broke all the way up to the 5,500 level, the short term and the intermediate term that I use were moving up, but the long term was still moving down. And my rule is, since I'm an investor, not a speculator or a swing trader or a position trader, I'm strictly an investor because my clients are investors. And that means all we're interested in is catching the long-term moves. We don't mind if we miss 10% off the top or 10% off the bottom, but we want to catch the 80% in between. So I'll bring up a chart later that shows that Consensio gave a buy signal when we broke through 6,000, which happens to be very interesting because that's where my phase 2 of a hyperwave broke down earlier on that gave us the signal we were going much, much lower. And so your question is, what's my overall sentiment? My sentiment for the market right now, meaning Bitcoin, and therefore all other cryptos, because all other cryptos follow Bitcoin, both up and down, and usually with a lot more volatility, meaning when Bitcoin goes up, they go up higher on a percentage basis. When it goes down, they go down higher on a percentage basis. In general, it's just a general tenet. It doesn't mean that every day and every second that happens. But in general, Bitcoin is the engine and all the other cryptos are the cars that it pulls behind it one way or the other. So what was interesting to me is that I had two conflicting signals. One with Hyperwave saying we were going down to 1,000, and one with this thing called Consensio that gave me a buy signal when the long-term moving average, which I use is a 30-week moving average, turned from down to up for the first time in the bear market. So I will always go with that technical instrument that is the most relevant at the time. And I'll explain that later when we look at charts, but that happened to be Consensio. And based on that, we made our first buy at 6,200, 6,500, and 6,800, not on the way up, but on the way down after it run up to 8,200. So Bitcoin spiked up to 8,200. We did not buy it, but we did put limit orders in down in the low sixes. And on the big, some people call it a flash crash that we had that one day that went from 8,200 all the way down to 6,200, we were filled on all those orders. And then we bounced back up, and we've been messing around between 7,500 and 8,400 ever since. So my view right now is we are still going much, much lower, and I believe we're going to hit 1,000 on the downside at some point. However, right now we are in an intermediate term bull market that could turn into something bigger. It could be that 3,000 was the bottom and that we have started a new bull market in Bitcoin. I don't believe that. But what I believe and what I think have nothing to do with the way I trade. I will watch now Consensio and a bunch of other things like the sequential trading system, which is on a sell signal right now, and a bunch of other things like Fibonacci numbers that come in at 9,400. But most importantly, the highs at 7,500 as we came down. The next high is at 8,500, which we have not hit, and we need to take that out. If we can stay above 7,500 and then climb above 8,500, then there's a bunch of overhead resistance that starts at 9,000, 9,400, 9,750, 10,100, and 11,100. And at those points, if we get above them, we're gone. Mm-hmm. We are in a new bull market. We will take out the old highs, and then we are on our way to, as you know, what I think potentially could be $5 million or $10 million Bitcoin based on the macroeconomic picture. But what I just outlined is not what I believe is going to happen. I believe what's going to happen is we're struggling right now. I believe we're headed back into the low sixes. I am not selling the positions we are in, but I've got stops right below 6,000 on all positions, which would give us a 10% loss on the trade. That's perfect risk for me. I don't mind doing that at all. But we only put 20% of X in, where X was the amount of money a client felt comfortable putting into the crypto market. So we're 20% in, we've got 80% to go. I won't put that 80% in unless we take out all that overhead I'm talking about. So that's a very quick sketch of where we are in crypto land right now.
Yeah, to go back over a few of those points, I actually remember those days, the first time we bounced from six grand to 10 grand. There was the feeling that we could still just continue upwards at that point. Now I guess we'll skip over a little bit and bring us closer to now. For me, the market sentiments have felt the same. I originally had anticipated that we would go lower than $3,000. As soon as we broke $6,000, everything came off the table at that point, because it just, the sentiment didn't feel right. And then when we turned up here, I started to meditate on the idea of how perfect of a capitulation and an anger moment it would be if we went up this high, turned around really sharp, and then came down anywhere between the $2,200 and $1,200 area. That would be like the ultimate smackdown on everybody that just jumped in. But the other thing I wanted to go over too is that it made me really realize that there's a lot of people in this space that are brand new to any type of business or investments at all.
That's
and
right.
A lot of these people don't understand how important strategy is. And how important being able to play in this space without a whole lot of motion really changes the way you trade and invest. So I think I agree with you. I think we're probably going lower. Whether or not that happens is an entirely different story. And this is one of the things with technical analysis, because if we go through $9,000, I agree, we could go up to 100, 200,000, and on our way to maybe even hundreds of trillions of dollars, depending on what happens in terms of the fiat system.
Yes.
Now, this is so entertaining for me because this has so much to do with the level of energetic sentiment coming from the people that are invested in this space. And, I'm a young man. There's a lot of other people, I can tell by the way that they're typing in the comments and what they're saying on Twitter, that they're not aged, they don't have much experience in the business world, and they don't practice some of the things that are really important in investing. So I really like the structure of your sentiment here, and to follow the analysis, like, okay, well, we're going above 6. It looks like we could go to 8. And after that, who knows? So I love that you came out and let everyone know that you're adjusting your strategy, even though that we both still kind of sit on that same fence that this thing could teeter totter. And to me, just so everyone in the audience knows, I don't fucking care what price Bitcoin is at or what it goes to. I invested in this space because there's a philosophical concept behind kind of trying to give power to everyone that I was really interested in. So regardless of if it was a failed experiment or not, the price didn't mean a whole lot to me. People kept sending me messages like, "Oh, what happened to $1,200?" I'm like, you guys no one seemed to understand that. Like in a band we had a really big band of support between 3,200 and 4,200, between 2,200 and 2,800, and then between 1,000 and 1,600. And for me, those all represented like a pyramid of buy potential. So I put, around 30% in between 3,200 and 4,000. But so anyway, Sada, what I wanted to lead in here too is that I think what I've started to realize is that most people's sentiments is, even if they have 5 or 10 grand as a newbie or would-be investor, they've been waiting instead of just going out and buying their first $100 in Bitcoin and figuring out how to use it. So I just wanted to take this time to also, if anyone doesn't have any, just buy $100 worth. You shouldn't care what price it's at. You should be investing in understanding why this space is so valuable. Anyways, I wanted to actually ask you a little bit about what your thoughts are with the current dollar level and the S&P 500, because we peaked out at some new highs in the S&P 500, and even the DXY tried to break out of a really long ascending triangle that it had been in. Do you want to tell us a little bit your sentiments in the markets as a whole and how these two have been interacting over the last few months?
Yeah, great. It's a great observation, because what we're seeing in Bitcoin in the crypto world is not a world unto itself. A lot of people within the community believe that, but I am a firm believer it is not. I think is integral to what is going on in the macroeconomic world, and that's what you're talking about now. Right now, the dollar remains the strongest currency in the world and just hit new highs 2 days ago, over 98. It's on its way to 100, I believe, and maybe well above that. And the reason for that is the strongest stock market and the strongest economy in the world over the last couple of years, 3 years, has been the US market. And as long as the US stock market is a reflection of real fundamentals in the economy in the US, then it's going to keep going higher. And we saw that 2 weeks ago. We hit new highs on the NASDAQ 100, and the S&P 500. We did not hit it on the Dow Jones Industrials, or the mid cap or the small cap indexes. But a number of sectors are still at all-time highs. And when I say all-time, I mean for the last 150 years. The utility index is at all-time highs. Consumer staples are at all-time highs. There's various parts of the economy that are very strong. The U.S. economy. The only reason I talk about the U.S. economy is not because I'm an American, but because it's the largest economy in the world by a large factor. It's the largest holder of gold in the world compared to all the other countries. Other countries are trying to catch up with us. Russia, China, and India for the last 7 years have been the biggest buyers of gold in the world, but they still haven't come close to catching up to the United States. The United States has more gold than the next 3 biggest countries in the world in terms of their holdings, even after all that buying by China, India, and Russia. But what's important about this discussion is it's all macroeconomic, and Bitcoin can play, might play, I believe will play an essential role in that if given the chance. And so even though I can be short-term or intermediate-term or even long-term bearish, which I have been since December of 2017, and I'm still intermediate and long-term bearish, even though I'm long a small amount of Bitcoin now. And when I say I'm talking about consulting clients and clients where I actually manage their money, plus in my own account. So I'm using the collective I when I'm talking about these things. We acknowledge that at various times, the conditions are right to be long or short any market in the world. I have said from the very beginning when I got into this, which was only 18 months ago in terms of going public, but I've been in the Bitcoin market since 2013, and have followed it very closely, but got pretty disgusted by what was going on internally within the market, how porous it is in terms of being able to have confidence on exchanges and all of that sort of thing. So I didn't participate until 2017. But my understanding of the macroeconomics told me very early on that if this experiment is given a chance to work, it will find its way into the world financial structure in a very, very big way. So far, it has not been given a chance to work. And the reason for that is not Bitcoin. There's no one at Bitcoin you can point to and say it was his fault, or it was that committee's fault, or it was the fact that they've increased the number of Bitcoins, they changed there's nobody there. There's nobody home. You knock on the door and nobody's going to come and answer it because there are no people involved with Bitcoin. Everyone involved in the Bitcoin world is you and me and some developers who are willing to give their time for free to make it better and better, faster and faster, stronger and stronger. But every other project out there has got somebody you can point to. And some of them are good, some of them are neutral, some of them are bad, some of them are scammers. Some of them have the best intentions in the world, are brilliant businessmen, but they all have one thing in common. They can change the rules of the game without you or myself being able to intervene. You can't do that with Bitcoin. Therefore, I believe the reason that Bitcoin hasn't taken its proper place is because of all that other stuff going on. Every time somebody buys EOS or buys Monero or buys Cardano, what they're doing is they're delaying the inevitable. And the inevitable is all of those are going to fail, in my opinion, particularly on a relative basis to Bitcoin. And we've seen that on this last because we've had the Bitcoin dominance go from 48% up to 62%. Now it's backed off to 55% because all of the other altcoins finally got in line and moved up and beyond what Bitcoin did on a percentage basis. As long as that happens, I believe that we have to go to lower prices to get rid of a lot of that stuff so we can all stop worrying about regulators and the SEC and Bitfinex and Tether and Quadriga and all that nonsense, and that will take place, but it's not going to take place tomorrow morning or next week or next month. It'll be a process. So in the big scheme of things, we were completely out of the US stock market starting in September and October of last year. We had been completely in for the 10 years running up to 2018, and then we slowly got out, slowly got back in, slowly got out, because the market kept going up and down, up and down. The market I'm talking about is the S&P 500 and all the big indexes worldwide. And they did that for 18 months, and they've still are doing that, except in the United States. 3 of our big indexes did go to all new time highs, but now they've backed off. They're down about 4 or 5%. They're going to be down another percent or so today. And the question is, what does all of that mean? And it means one of two things. It's binary. We've either come to the end of the road in terms of world GDP, world stock market positive activity, and we could be heading into bear markets that would turn into recessions and would bring about the collapse of the debt problem. That's one outcome. And that happens to be a pretty big thing. That kind of thing only happens once a generation, once every 3 generations, and it's on us now. The other side of that binary possibility is that the US market is telling us something, that the US economy is strong enough to keep this going, where the other indexes in the US catch up with the S&P and the NASDAQ, and the NASDAQ 100, and actually go to new highs themselves. I believe that is what is going to happen, not because of technical stuff, but because of the fundamentals of what's going on in the US economy and with the US dollar. As long as the dollar keeps going up, what happens is money flows from around the world into the US markets, because it's a better place to be than those markets with currencies that are weaker. And most of the world's interest rates are right around 0 or 1 or 1.5%. And that means there is no way to get any kind of a return off of capital assets. The way you do that usually is what the Federal Reserve did in the United States: drop your rates to 0. Hopefully that pulls you out of the mess you're in, which it did in the US after 2009, and they kept it at 0 and kept it at 0 and kept it at 0 as the stock market and the economy began to climb. What's happened all throughout Europe and in Japan and in a lot of other countries is they were so weak and their interest rates were so low they couldn't cut rates any lower. So as of today, 22% of all currencies around the world are in an economy in which the interest rates are negative. 22% around the world of all the assets that central banks run through their banking system are pegged at negative interest rates, which means when you go in to Germany or Japan and you deposit money, you have to pay them interest to hold your money. You don't get paid, you have to pay them. So the only place that's really not true in a large measure is in the United States, where we ran our interest rates back from 0 up to 3.3% on the 10-year. And now we've backed all the way down to 2.4%. And we did that starting in December of last year, 2018. Because most people remember reading stuff about Trump saying that the Federal Reserve shouldn't be raising interest rates, it's slowing the economy down, they should cut. Big war took place. The Fed said, no way, we're going to keep raising. That was in September of last year, and the stock market dropped 20%. Finally, in the second week of December of 2018, Chairman Powell of the Federal Reserve in the United States came out and said, okay, uncle, you're right. We shouldn't be raising interest rates. There's no reason to do it. We will not raise rates in all of 2019. That was the second week in December. We then went 50% long the stock market in the US, and we stayed 50% because I thought we'd get a 1 or 2 month bounce. We didn't. We went straight up into January, into February, into March, into April, and then hit all-time highs. On April the 1st, we went 100% long the US stock market. And just recently, because we've run into a problem with some of the indexes hitting new highs and others not hitting new highs, we went back into 25% cash, and that's where we sit today. 25% cash, 75% long the US stock market. We don't have investments in any other economies around the world. The US is the only place because of what the dollar is doing. Okay, what does all that mean in the big picture, and what does that have to do with Bitcoin and crypto? Everything. What gold is doing right now has to do with everything. There's three things you need to be watching: Bitcoin, gold, and stocks, the US stock market. That's where everything is happening, and they're all linked together. As you know, I wrote that article called The Long and Winding Road to $10 Million Bitcoin, in which what I lay out is not what Bitcoin is doing, but what the world macroeconomic picture is doing. And what the world economic picture is doing is, over the last 20 years, total world wealth has grown by about 137% over a 20-year period. But total world debt has grown at almost 3 times that rate. And because of that, world debt has quickly overtaken all the wealth in the world. Everything that you own and I own and every corporation owns and every country owns and every municipality, all the real estate in the world, residential, commercial, and raw land, all the gold in the world, all the commodities in the world, all the stock markets in the world, all the sovereign wealth funds in the world, all the pension funds in the world, everything. You take it all together, and we owe more money worldwide than we have assets to pay for. And that's what the problem is. And there's 5 solutions to it. One is Bitcoin, but Bitcoin's got to get to $5 or $10 million to be able to do it. 2 is gold, but gold has got to get to about $20,000 an ounce to do it. 3 is a combination of Bitcoin and gold, because Bitcoin and gold, or Bitcoin or gold, can be quickly moved to those levels if people switch out of stocks, bonds, real estate into those things. Now, that's impractical, but part of that equation can be done by governments, not with Bitcoin, but with gold. I think that's the most probable solution to the problem, is going back to a gold standard. To do that, they would need to peg gold at something like $20,000 an ounce. And it would occur very quickly. They could do it in a weekend. It took 22 days in 1944 for the Bretton Woods Conference to come up with a whole new world order where gold and the US dollar were the reserve currencies of the world. It would take a lot less time to do that today. And I think that's probable. I'm hoping it's going to be Bitcoin, because I think going to a centralized format in which governments are in control completely of the entire financial system, as they have been since 1971, when Nixon closed the gold window, is just going to put us back into the same mess again at some point. If a big part of that becomes Bitcoin, which is out of the reach of regulators in general, not completely, but in general, then we could have something like a world order based on 50% a gold standard, 50% a Bitcoin standard. The two of them wouldn't move up or down once they reach the levels. You'd have an S curve of adoption, where now gold would be pegged at some huge number, Bitcoin would be pegged at some huge number. Why would it be pegged there? Because there'd be no reason for you or me to buy it anymore. It would be at such a level that it doesn't need to go any higher, and there's no demand to make it go higher. But that level is so far above what anybody can imagine at this point that that's all theoretical. The third thing, and unfortunately, I believe the most probable outcome of this mess is just defaulting on the debt worldwide, a widespread debt default, which would just leave us in ruins for generations to come. But that would be forced on us. It wouldn't be chosen. It would simply happen because of the weight of the debt compared to the world wealth. And then the way I would like to see us get out of this mess would be to grow out of it, which is what the US is trying to do, by having the GDP higher than interest rates and inflation under control, so that the productivity of the nation can hold around the 3% level. If we can do that in the US, that means everybody else can do it. Obviously, Turkey and Argentina and Venezuela and Zimbabwe can't do it, but the great majority of developed countries can do it if they just get their houses in order. Unfortunately, no one is getting their house in order, so I don't see that as probable, but I'm hoping what the signal from the US market, US economy is giving us is we can buy another year, buy another 2 years, buy another 3 years, in which case Bitcoin and the crypto market can clean up its act so that Bitcoin can take its rightful place and really be what we hope for Bitcoin.
Yeah, there's a few things I want to touch on. We had talked about this gently in our first conversation, that some of these options here are far below suboptimal, because it could, like you said, the negative effects of some of this stuff could be disastrous for generations to come. I mean, no one in this day and age is prepared. For instance, we've seen, this is a little bit off topic, but we've seen temperature changes on the planet, wherever it's coming from. But this likely means that we're going to see a large effect on commodities such as grain, rice, and the rest of our produce, because this is how people survive. It's always been the awkward part of my contention is that, to value anything like gold or Bitcoin or have a stock market in general means that everyone is surviving, because that basic need of human shelter and food is taken care of, and people now have the privilege to think about things like collector's art or nice cars or bigger houses. But if we were to go back into anything even similar to the Depression, with global food shortages potentially on the run, this could be disastrous. And then at what point does money have no value next to things like water? Because I mean, if I've always thought of it like, okay, if I'm in the desert and I'm kind of dying, right? And you're like, hey, look, I've got food, water, and a palm leaf for shade, or a bunch of gold, silver, and Bitcoin. You're going straight for survival, because this other version of value doesn't exist. It's always the argument from the gold bugs I never understood, which is that there's no intrinsic value to anything minus once you take away human survival standards. And the places that you're talking about, the potentials of if we were to just go into a debt jubilee, see markets crash down to the bottom, this could be horrific, because the children and the millennials today are not prepared to go out and garden and make food for themselves. They've lost all touch with how to produce most of anything. So it would be massively disastrous. Anyways, I hope we don't go there either. The other thing I kind of wanted to give you maybe a bit more of an argument against was, I don't think. I agree with you. Most of the digital assets are going to go to garbage. Most of them are garbage, right? But there's, I think, a large part of this ecosystem that's being overlooked, and it's really hard to grasp, is just digital scarcity in general. Now, I don't believe scarcity exists in the universe. As far as I can tell from all Buckminster Fuller's work, we live in an infinite, boundless universe. And because of that, we probably shouldn't be thinking about scarcity models. But I've always contended that digital scarcity is extremely important. So for instance, even the collector's world in video games is huge. These kids pay massive amounts of money to have little blankets on their head in a video game character, right? And to them, there's, a lot of the younger generation are growing up with viewing a different part of what we're used to with the internet. It took me a little while to grasp, but digital scarcity should affect everything. So even though I think I 100% agree with you, Bitcoin's taking the place, or at least we can hope that Bitcoin takes the place of the global remittance structure, so we don't crash face first into the ground. But that still leaves a massive amount of room for whether or not. Okay, let's use music titles, for example. Like, one of the things that Napster was able to take advantage of was the lack of scarcity in the digital world. So if I had a song, I could create an infinite copy of that song, and now everybody had it, which decreased the value of why you would ever want to pay for the song, because I could just go get it from everyone else. But if we start to see digital scarcity take over, in music or in videos, if I send you a song now and I don't have that song, you have that song. I think this, this is my argument for why, a lot of the other tokens, they won't reach the heights of Bitcoin, but it doesn't, in my mind, there's a strong argument for why these, whatever they might be, these different companies are going to be able to provide a lot of value in terms of digital scarcity, because it's just something we haven't seen before. And again, with the younger generation, myself included, I grew up with computers for most of my life. So it seems more second nature to me to have a digital money as in comparison with something like gold or silver, which is almost impossible to carry around. Whereas with Bitcoin, I can run around the world with nothing but a few numbers and some private keys saved in my head. And now you've broken every border law security run through every airport security check. So there's this level of tangibility where I agree with you. It seems like the best solution is that we have a somewhat easy transition into this digital space, whether or not it may even be orchestrated to some degree. I'm not going to base conjecture on that, because it's pretty easy to say we might be the new Illuminati. We're the new people ushering in the next generation of whatever happens, as so it has always been. But I definitely don't agree that, a lot of this stuff is going to go to garbage, or most of it's going to go to garbage. I agree with, but I think that there's a bunch of them that are going to provide a level of transactional security, to, whether it's like for books, like if I send you a book, I no longer have that book. I don't know how far that extends into the world of enterprise or business and how it affects everything. So I just wanted to put that out there, because lately I've been basically going around in the background and collecting what I call baby Bitcoins, because you have all these proof of work models that are essentially Bitcoin, right? You've got Litecoin, which is Bitcoin. It's just a slight variation in the code. You've got Digibyte, Florin, Raven. They all use the Bitcoin blockchain consensus algorithm, but they have significantly less hashing algorithm or hashing power, or maybe less transactions. And I think that a lot of these, I can, it's kind of awkward to think, but Bitcoin's a collector's item. One of the things aside from it being deflationary, like all technology is, it really holds that idea of digital scarcity. And it was like the first Beanie Baby out or whatever. I'm not trying to compare Bitcoin to Beanie Babies, because it's very degrading to how powerful the concept of Bitcoin is. But, a real part of this, at least to my understanding, is that this is a form of a collector's item, and that the scarcity model itself provides that higher level of evaluation, because we can't just make more of it, as we've seen in the Federal Reserve. And and I don't mean to go on a rant, Tyler, for too long here, but it was one of the things that kind of confused me about everyone getting down on Tether. It's like, well, who gives about Tether? Because the U.S. Federal Reserve has been printing money with no regulations and no audits for the last 60 years, and no one seems to complain. Yet when we do it in the crypto market, it's beneficial to us, and we're like, oh, bad Tether, like bad Bitfinex for you guys for just making your own value. It's not backed by US dollars. It's like, who cares? The US dollar's not backed by anything either. Why are we giving the crypto guys a hard time? It's always so confusing for me. So I also wanted to, I didn't mean to go on such a long rant, but I think you're absolutely correct in the assertion that this is the whole story is really important here. So I always really appreciate your outlook on gold and the markets. So my question for you is, are we seeing, or do you think we're going to see a continual rise in the stock market under a degrading dollar over the next 2 to 3 years? Because I don't think all of their printing power has gone astray. They might have a little bit extra in that cannon that we didn't expect.
That's a great question, and I love anyone that goes off on a rant that knows what they're talking about. And obviously you do, because you're right in the middle of all this. disagree with your conclusions, but that doesn't matter. You disagree with my conclusions on that same subject. What I've told people about the cryptos is I would be surprised if just give me 5%. 5% of the 3,000 projects now be about 150. I think there's 150 out there that will be the survivors for a period of time until Bitcoin is accepted by outsiders, meaning by central banks and hedge funds and all of that, which they are not at the present time. And that allows all of these other things to come and go up and down, which is great for speculators because they're very illiquid, so you can jump on them, and at the time of a pump, you'll make a lot of money.
Mm-hmm.
So that's a different topic, meaning are they valuable in terms of being able to trade them? Absolutely. In fact, they're more valuable than Bitcoin to be able to trade because of the volatility. If you're a good technical analyst, you can just sit there all day long and make money, both on the upside and the downside. Exactly. But that's a different question than the underlying intrinsic value of them. And collectibles, that's a great way of looking at it. We did a lot of work on things like baseball cards and yes, beanie babies and pet rocks, and we could name hundreds of those things, including digital things that come out and everybody does them for a while and then they don't for whatever reason, usually because something better comes along. And when something better comes along, then collectibles and things with without intrinsic value quickly go very close to zero or go out of business, particularly if you got a budget. And the thing is about Bitcoin, it doesn't have a budget. There are no payrolls. There is no marketing budget. You don't pay anybody to do anything. Every other project, there's a group of people, they get paid. There's developers that get paid. There's hardware that's got to be bought. And so what they do is they manufacture money to make those payments. And as the price goes up and down, they either make a lot of money or they quickly go underwater and have to fork off with another one and then fork off with another one and another one. So that's the only difference I see between everything else and Bitcoin, because Bitcoin cannot go above 21 million and everybody else can and will and has. And it's just a question of when they do that. Even when they say, no, we will never do it under any circumstance, it's written in our bylaws and that's what we've told our investors and blah, blah, blah. But then they end up doing it because they're forced to, particularly in a bear market. Okay, anyway, the more important question to me is the one that you asked about. Can the strength of the U.S. economy and the dollar being strong with all of the problems the U.S. has in terms of debts, deficits, keep going? And the answer is probably not. And but it is still the strongest. And what happens, just like if Bitcoin begins to move up and others can't keep up with it, what happens is more and more money will flow into Bitcoin, not the others. The same thing with the US dollar. As long as the US dollar is the Bitcoin to the world and all the other currencies are the cryptos, you can be in Turkey or you can be in Venezuela and you can change your paper money into US dollars. And that is, unless you get shot for doing it, and in some places you do, or you're restricted or it's regulated or it's very difficult. Turkey right now is having a lot of problems with that, with people that want to be in US dollars, and they're making it difficult to do it. But what my point is, as long as something is stronger than everything else, it's true, you could say it's the strongest house in a bad neighborhood, or you could say, use all the kind of metaphors, but that doesn't detract from the practicality of where money flows. And money always flows from the weaker to the stronger. It always goes from bad money to good money. It continually does that. And So even though we've got a $23 trillion debt in the US and we're running $1 trillion deficits every year, it's still the strongest currency. And it's the strongest currency because of the underlying economic strength. Now, I would differ with you a little bit saying these paper dollars have nothing backing them. What they have backing them is the productivity of the United States, the wealth of the United States, meaning natural resources, the workforce, the innovation in corporations, the education, all of that is the wealth of the nation. And that's what's backing the US dollar. It's not backed by a reserve currency, but if you think in terms of the US has got the largest amount of gold in the world, and it is not being held on the books at $1,300 an ounce, it's being held on the books at $35 an ounce. It is hugely undervalued in terms of our backing of gold if we go back to a gold standard. And no other country has that. So that's why there is the possibility, and that's all it is the possibility that the US and the US dollar and the US economy and the US stock market is in a position to keep the game going longer, to allow others to be able to benefit worldwide from trading with the US, which is one of the big things that people are missing about all of this renegotiation of trade agreements. It's actually in the world's interest to diminish the strength of the Chinese system relative to trade, not in the terms of the dollar amounts, the yuan or the renminbi amounts, but in terms of the restrictions put on those that attempt to trade with China, in terms of stealing intellectual information, taking over corporations, not allowing corporations there, even though we allow them here. And by here, I mean all over the world. And the world agrees with that, but doesn't know how to go about doing it. And now we've got this guy that no matter what happens, he's going to force the issue for better or worse. And it could very easily be for worse. It could be the thing that triggers the next downturn in the stock market in the US economy and the world economy. Or it could be that there is a deal done and we buy ourselves another 2, 3, 4, 5 years in which countries around the world can begin getting their houses in order and we could grow out of the problem.
Yeah, it's such a strange time. I mean, this is one of those moments in
the most exciting in all of civilization.
Right?
You know,
There's
exciting
on the plate.
Exactly. The old curse, the Japanese curse, may you live in interesting times. The word interesting there has got both very positive and very negative connotations. And you pointed out some of them. And the biggest ones that the world is interested in right now is global warming and overall pollution and water quality. And big important issue. Important to remember, though, that debt is growing at 3 times world worth, world assets. That's the problem. That's what has got to be taken care of. The total temperature of the Earth over the last 100 years has gone up 1%, 1 degree. It's warmer, and it's getting warmer, and it will continue getting warmer, and it is beginning to slope up exponentially. But important to remember that the growth rate was 1 degree over 100 years. And what we're fighting now for is for it not to go up another 1 degree over the next 50 years. Well, that growth rate is 50% over a 50-year period. We're talking about world debt growing 337% in the last 20 years. So that's where the problem lies. You can't solve any of the other world problems, social, economic, political, military, unless you take care of this problem. And therefore, very simple solutions. But who and when are they going to be implemented? Who's got the guts to actually say, okay, that's correct, let's do it tomorrow, the next day? Or is it going to be forced on us? Now, in the world of the environment, it is an incremental thing. The oceans are rising incrementally. The ice is melting incrementally, quickly, but incrementally. In other words, not all at one time, because it's not an exponential move. The move we are seeing in the underlying debt of the world is growing exponentially. It must be handled. It must be handled now. Bitcoin, gold, a combination. And we haven't talked about one that is getting more and more probable, which is called the SDR, which is the special drawing rights of the IMF. And I'm trying to get my head around it, but if you give me 2 minutes, back in 19...
Yeah, actually, sorry, just to quickly interject, I actually remember, just to jump into the SDRs there.
Great.
If anyone's interested, when you fly, on the back of the disclaimers for your receipts for how much you can be reimbursed for lost luggage or any of this, they actually tell you the prices in the SDR, and they've done that for the last 5 or 6 years, because so the SDR is the special drawing rights. It's a basket of currencies I think it's the G7 countries that have their currencies in this basket together, and that the SDR was potentially supposed to be one of these world currencies that they were leading us into. So
yeah.
Keep going. Sorry.
Yeah. And the history on it is, it was 1944, Bretton Woods, when they set up the gold standard and the dollar standard as the reserve currencies. Everybody remembers that. And now everybody knows that it ended in 1971. But what people don't remember is the IMF, the International Monetary Fund, and the World Bank were set up at the same time at that same meeting. They've been around since 1944. In 1971, when Nixon closed the gold window and we no longer had reserve currencies, we still had the IMF and the World Bank. The World Bank is always run by a U.S. citizen, an American, always. Has been since 1944. The new one is David Malpass. He was just nominated a number of weeks ago. The IMF is always run by a European, always. Why? Because that's the way it was set up. Now, what's interesting is an SDR is basically worth $1. And that is the currency that is used to make all the loans by the IMF to countries all over the world. Everybody, Brazil, Venezuela, China, anybody that wants money from the IMF or needs money has to go through a rigorous process. My partner, Leah, worked at the World Bank for a while, so she's got a great background in that, and how difficult it is, and how this one body that was set up back in 1944 controls the flow of movement around the world. What people don't realize is there is something written into the original establishment that says that any country that has 15% of world GDP has veto power over anything that is done at the IMF or the World Bank. How many countries are there since 1944 that have that? One, the United States. The World Bank is run by an American. The Americans have veto power over all other 220 countries around the world. Now, that supposedly just changed 3 weeks ago. And I'm trying to get the information on it. Any of your listeners that have done the research, I'd be very interested in hearing from them. Apparently, what was just changed and not vetoed by the US was to allow what they call the BRICS, Brazil, Russia, India, China, and South Africa, I believe, those 5 countries to be a voting bloc together. And together, their 5 GDPs on a worldwide basis equals 15.4%, which means that all of a sudden there is not just one country that can veto action. Is one country and a bloc made up of those 5 countries. So the question to me is, number one, is that all true? Did that just happen? Number two, why didn't the US veto it? And then
there's too much other shit going on. They can't pay attention anymore.
Well, whatever it is, I think it's big news because it gives a theoretical possibility to a new way to solve the debt problem. What if the IMF and the World Bank decides that starting next Monday, each SDR that was $1 is now worth $1,000? The answer is that solves the world debt problem. How exactly it does and how it's administered, but what you obviously have at that point is a total breakdown of sovereignty of individual countries, because only one organization that isn't part of the United Nations is not voted on by anyone, and up till today only has one veto power and maybe a second, which is made up of 5 countries, 2 of which will probably vote with the US, and 2 that will vote against it, and 1 that's probably on the fence. Now, if all of that is true, then someone in the US gave a thumbs up to allowing that to go through. And to me, the only way they would do that is if they know all they have to do is convince one of those 5 to vote with the US, and then they're back below the 15% margin for the group, and they don't have veto power. So anyway, that's all speculation, but very interesting, and it shows that several levels above our hierarchy, all of these things are known and are being debated and trying to find solutions for it. And the best we can do in the business you're in, the business I'm in, is to be aware that those things are there, and then to use our technical skills to follow those markets and see where is the emphasis. Because whichever it is, if it's going to be the gold market, back to a gold standard, gold prices are going to start rising very, very quickly in anticipation of that. As of today, they are not doing it. If it's going to be something doing with cryptos and Bitcoin, the prices are going to start rising very quickly. Up to today, they are not doing that. They're just screwing around with a very small number of people on a worldwide basis, buying and selling from each other. Nobody else is really interested in it. If it is growing out of it, we're seeing some evidence of that because we're getting new highs in the US stock market. We're getting new highs in the dollar. So all I'm saying through all of this in a very brief period of time, because you've made some unbelievably cogent, incisive points, and it allows me to play off of that to bring together what I see as this overriding structure we've always got to be aware of.
Yeah, well, thank you for that. You know, it's such a strange thing, right? I'm good at very few things, but one of the things I practiced when I was younger, I took a lot of sacred plant medicines, like things like psychedelic mushrooms. I was considered a criminal for a lot of this, but it gave me a lot of insight into visionary stuff. And as I'll go off a little bit of a tangent here, one of my really good friends has been a writer for the Rolling Stones for the last few years, Men's Journal, and a few other big publications. And I remember in 2015, there were some very abstract things I told him. One of them was that Donald Trump was going to be president. Bitcoin would go over 10 grand. There's a few more I won't necessarily name right now. We'll keep it for off the air conversation, because I just rather not be belittled for shit that might come true 5 years down the road. But it's interesting to look at the potential visionary aspects, like to try to imagine all the possibilities that are in front of us, and then to come up with an educated guess about what's going to happen. And this is one of the coalescing times where you have a real big divergent forms of technology coming in to change everything. We might see new types of energy production. So this is kind of an abstract question, and more of I guess a thought process, just to lead this off here. I've always been interested in the forms of technology replacing money, because it's my operating assumption that the majority of the reasons why we need money in the way that we understand it is because we need to store energy. So money is a store of energy that we can transfer to different types of formative values, like if I want blankets or heat or whatever that might be. So part of this abstract question, one of the things that I've been watching in the background is some of the work that these big companies have been doing in the fusion space, not nuclear fission, but nuclear fusion, which is a very different form of energy creation. So I've at least the last few years, I've been wondering, how long do we actually make it where we have a tangible money? Because and this is entirely speculation at this particular juncture, but it's one of the things I think is coming along that list of ideas I bet with my friend, is that we might see a release of friction in the world of energy. And if we see a release of friction, what value does money as we know it have? If I have a device where I can power the town of 100,000 people for maybe we'll say 100 years with very little input, does the value of what we understand today massively degrade? Like if we could get on a plane and it costs significantly less because of the production of energy. There's so and this is what you were kind of leaning into this too before about, we really need to solve the problems in the money before we can focus on trying to address bigger human problems. And I very deeply agree. We're looking at symptoms a lot of the times. People are like, okay, well, we need to focus on, making government a better place. It's like, well, if you have the power of the money in very few people's hands, the symptom of corruption is not the way you solve it. So I've always, at least the last year or two, I've been kind of under this strong conjecture that over the next 10 years, because of this very strong divergent technology that we're seeing in terms of whatever that potential might be. I mean, from things like augmented reality, the virtual reality space is starting to take over. Do we see a time when technology gets to a point where it's so deflationary that money itself starts to lose value? I guess that's the kind of sentiment I was leaning into. But anyways, I don't even know if that's really a question, but this is just something that's been on my mind the last few years, is if we see a release in the way of the friction of energy creation, like going from things like gas and coal to a much more abundant source of energy, what's the use of money in the way we know today, aside from maybe just tokens of gratitude to begin with?
Yeah, isn't it fascinating? I think that's some brilliant stuff. But isn't it fascinating that the big question is in currencies, cryptocurrencies, is the cost of mining. That you build faster and faster hardware through technology, which means that it's more and more profitable, and you use less and less electricity, but what you're doing is mining and mining more, so you start using more and more electricity, which is kind of a metaphor of what you just described. And that's always what civilization has attempted to do. The friction of a stone wheel on a cart is reduced when you make it a wood wheel, when you make it a thinner wheel, when you make it a stronger wheel. When you then don't have a horse pulling the cart, you've got a machine pulling the cart, a faster machine, a bigger machine, on and on and on, which is overcoming friction. And everything we do in our life using muscle power to do things is friction that wears the body down. And therefore, there are better ways, better habits of living in terms of what you eat and how you exercise to overcome the use of friction, because it's not an intellectual thing. It's moving matter around, moving gold around from one person to another person. It's more efficient if you can do it with numbers from one person to another person. And there's benefits beyond that, which have to do with decentralization, where you don't have a third party looking at everything that you're doing. So I agree completely. And science fiction is full of wonderful stories going far into the future where that actually exists. There's no reason to have money. There's no reason to hold on to things yourself because everything is so abundantly accessible to everybody, not just to a few, a small few that happens to have hoarded this thing called money. So very interesting.
Yeah, it's such a fascinating time. I really love hearing your sentiments. I mean, we're gonna get to see as the future unfolds. I mean, it's a pretty slippery situation, and I just want to, for all the listeners out there, I want to go over this because I think generally people like you are fairly misunderstood because there are a lot of newbie or would-be traders or investors that are interested in this space because of the moon and Lambo talk that you see, and I think categorically it's noticeable. And one of the problems is these people generally, they have not been successful before. They don't know that success isn't the end to the game. Like one of my best friends here, Tyler, he started what's now $1 billion business with only $500. And the guy, people would, like, most people think, oh, I'm going to make a few $100 million and then I'm going to retire. No. If you're that good and you play the game, you just keep playing the game. You didn't start playing because you wanted money. You started playing because you're entertained by the hustle, or what, Gary Vee talks about.
Yeah.
And this is one of those spaces where, I really appreciate your length of entry and exit into the markets. It's very unemotional. It's based off your strategy, and you follow that strategy. And I think that's the only way you can really play. Everyone's got their own way to enter and exit into markets. And I think what's happened, and one of the reasons why people, like, even I get a lot of flack for even looking at potentials, right? You're like, oh, you'll never do that. It's like, well, when we were at $6,000 and I was talking about 3,200, everybody said, oh, it will never happen because it costs more to mine Bitcoin. It's like, it doesn't matter. None of this matters. Anyways, the point of this is, I think because there's so many new people to investment or business, they think that this is their only chance to success. And if you've ever seen or anyone that's successful in business, you get multiple chances throughout your life to capitalize on your skill set or what you might be good at. There's a lot of people that can make probably more money by building a legitimate business plan over the next few years than they could have by just investing in Bitcoin, because business infrastructure will always be valuable to people because it's providing service and products. And anyways, what I've noticed is that there's a lot of people in this space in general that don't have access to the mentors that I've had, and because of that, it makes it very difficult. So now what I've started to lean into is realizing that there's at least half of the people that have never done well, and for better or for worse, they think that was their last chance. Like, oh my God, Bitcoin at $3,000 and now it's at $8,000. Like, that was my only chance to ever make money again. And this is the exact emotional dialogue that makes me realize that a lot of these people haven't been successful. Even if you were to give them $10 million, it would probably squander away in a matter of a few years, because wealth management isn't something that happens overnight. It's not something that you develop easily. It takes a lot of failure. It takes a lot of risk adjustments as you go through. Tyler, you and I think we generally are more used to people that have I look at the demographics of Arcane Bear's channel. It's like 35 to 65. People under 25 don't even want to watch what I have to say because there's strategy involved. We're not just, most of it's, oh, we're going to $1 million. It's like we categorically think that's potential, but there's also the potential for much lower. And anyway, so I just want to tip my hat off to you for staying calm through all the nonsense that everyone goes through. I get it as well. And again, what I want to point out to everyone is, if you feel that way, you're new to the space, maybe only ever had $5,000 or whatever, the best thing you can do is not think about what price you're getting in at. It's just to start investing in small amounts so that they can understand what's happening. Because a lot of people they're like, oh, I've got $5,000 I want to invest, and I could have done it at $3,000, but now I don't know if I'll do it at $8,000. It's like, well, just shut up and buy $100 worth, and then buy another $100 worth. And those, anyways, so one of my new rules of the channel is to always remind people that if you don't own or have any exposure to this, just start buying a little bit and figuring out how to store it safely, how to move it between point A and point B, because if you do that, you're way, way ahead of the pack. It doesn't even matter how much you invest into it. It's that you really understand why this is valuable. Anyways, I wanted to end with that because, like I said, I really appreciate the emotionless strategy. That's what I like to get into. I still break trading rules every now and then. I'm like, it's so easy because technical analysis, the hardest part about it is to not be emotional. It's to follow your strategy, enter and exit without getting upset or too excited. Those are the things that almost always ruin everything.
That's exactly right. Well, thank you so much. That's valuable information for everybody. And that's why I like your show so much. Thank you.
Thank you, Tyler. It's been an absolute pleasure. For all the Bear family, again, remember to give us those thumbs up if you enjoy this content. If you don't, give us the thumbs down too, because YouTube does not shit what you think. They're going to give us more energy, whether you like it or dislike it. It's all valuable to us. Also, if you guys want, leave your questions, your comments down below. You can follow Tyler at Lucid Investments on Twitter.
Lucid Investments on Twitter, and lucidinvestmentstrategies.com is our website.
Beautiful. And as well, I love your channel, Hyperwave. You're often doing chats with Ven Zen and Tone Vaves. I think and again, I'll just leave it off with this. Doing technical analysis, I guess most people just don't understand. You're looking at ranges of possibility, and from there you assess risk, and you're supposed to make moves that make you less emotional. That's
right.
Beautiful. Tyler, I want to keep you on for just a few minutes afterwards.
Terrific.
Arcane Bear family, thank you guys all so much. Tyler and Leah Wald for, again, helping me set this up with you. I really appreciate your guys' energy today.
Great. Thank you very much.
Have yourselves a great day, Bear family. We'll see you again on the next episode.